Welcome back. You're still with us here on Editors Roundtable. We have a special guest, as always, here in our studios with us. Mihir Vora is Chief Investment Officer at Max Life Insurance. Mihir, great that you could make it with us here. Appreciate your time.
Always a pleasure.
You know, we were talking about earnings and whether markets are getting enough help from earnings. And if you take stock of Q2, the answer is clearly no. I mean, there is all this relative outperformance and relative optimism vis-a-vis other markets. But at the end of the day, earnings need to accelerate, which is not happening. Is that a concern?
Yes and no. On one side, you have this huge chunk of earnings, the stock of earnings which is in financials, especially the banks. They look pretty robust for the next at least 1.5 years. So till FY24, I don't see a problem with almost 50 to 60% of the Nifty EPS composition. So there, I think we are okay. And the couple of places where we have seen downgrades in earnings is basically in the metals and the commodity space, basically, which had run up too much in any case. But those, have a low PE in the overall market. So that, is a cyclical component. Probably the markets will look through. The concerning area would be in the discretionary and the consumer segment, where we have seen significant margin pressures. So my guess is that companies have been taking price hikes to the extent possible. And if the rural economy, which has not allowed really FMCG companies to take price hikes to the extent required, if the rural economy turns around, then we should see FMCG and auto companies also come back on the margins front. So yes, it is a cause for concern, but I would wait to take a call for at least a quarter or more before getting negative about it.
Okay. Well, it's really nice to see you in person, by the way. I think we've chatted for years remotely, and great to have you here with us in the studios. I don't know if you got a chance to look at the piece that Anuj had put out about IT stocks, and valuations are looking compelling now. Is this a good time for long-term investors to be, putting a chunk of money here?
Well, it will depend on what your domestic economy view is. If we are positive on the domestic economy, which I am, then IT will continue to underperform. That's my view. And I think Prashant was mentioning, I was just listening into the conversation earlier, that ultimately it's not necessarily the absolute level of earnings that matters, but the trend of earnings. So if you're seeing the upgrades in a sector, then you probably will have re-rating continue and the PE will continue to go up. And in the case of IT, we are beginning to see downgrades and slowdowns, which means that the PE may not be, sustainable. So even if you see say 3% downgrades in IT stocks, earnings estimates, you probably might see the PE, relative PE to the rest of the market come down. So I'm a big fan of earnings upgrades, downgrades, and I think IT sector will continue to see some downgrades. That's why I continue to be negative on that.
Mihir, good evening. The big debate is on banks. The outperformance of ICICI and SBI for last 3 years, and now the erstwhile outperformers, the HDFC banks and Kotaks of the world, they are catching up. How are you playing this whole theme?
In financials per se, I think the banks are, as I said, for the next 18 months, I see as being winners. And the whole game now within the financial space is about liabilities. There is going to be a scramble for liabilities. Banks will need credit growth, and it's already happening. So I think all the non-bank financials, whether it's NBFCs or even the other segments of the financials, will face competition from the liability scramble from banks. And I think banks with huge liability franchises, deposit franchises, will continue to outperform. The big will get bigger. Branch networks will start mattering again.
So does that mean, Mihir, that within the financials, you'll only look at banks and avoid the NBFCs, MFIs, and small finance bank? Is
Absolutely.
That a big call?
That's the call, yes.
Okay.
Because liabilities is going to be theme, at least for a few months.
Mihir, the liability side of the PSU Banks, which by the way have been the stars of this year, they're pretty strong, right? And that's what will hold them in good stead. What's your take on them? That re-rating everyone's been talking about, well, the index itself is up 45% in this year. PSU Banking Index. The SBI has been the pick, the consensus pick, but the other few banks, that's where the money has been made. Too late to get onto that bus, or still there is some cushion out there?
There is a cushion out there because I don't see NPA cycle deteriorating at least for a few quarters for PSU banks. But hand on heart, I would play PSUs as cyclical plays. So while the private sectors have led the charge, there's always going to be a valuation catch-up. But they are not a long-term structural story still because of the traditional issues of mission, vision, management, whatever you call it.
Okay, well, In case we don't meet again, Happy New Year to you. We're getting into the festive season, so hope you have a great one. And thanks once again for joining us here in the studios on Editors Roundtable. Appreciate your thoughts as well. Well, with that, it's a wrap on another edition of Editors Roundtable. Thanks a lot for watching. See you folks again bright and early on Monday.